Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is BTS, that's Behind the Scenes, a show where we share a sneak peek with all our viewers of the latest edition of the Business Today magazine. Joining me on this edition are Anand Adhikari, Managing Editor, Business Today magazine. Also joining in is Economy Editor Surabhi and Ashish Rukhaiyar, Senior Associate Editor of Business Today magazine. Welcome to all of you and thank you so much for taking the time out for this discussion. And now to show the first glimpse of the latest edition of the magazine to all our viewers. Well, you can actually see, the talk of the town right now is Jio Financial Services, and that exactly is on the cover. The cover story has been written by Anand Adhikari. So let me kickstart this discussion with you, Anand. And of course, when anything related to Reliance Industries gets a whole lot of eyeballs, a whole lot of viewers' interest, readers' interest as well. And this time around, after making a big disruption in the telecom space, Reliance Industries, Mukesh Ambani making an attempt to do the similar aspect with the financial services space by launching their Geo Financial Services in this segment as well. Help us understand, first of all, about what Geo Financial Services will entail, the primary market segments for Geo, what will their respective sizes be, and who will be the main competitors in these segments for them.
So thank you, Sakshi. Geo Financial is following a universal banking kind of a model, which we have seen in the market, like HDFC, SBI, Kotak. These are following, and today, if I see, these universal bank, almost 20 to 25% of their net profit, the group profit, is coming from the non-banking entities like insurance and the AMC. It's a good diversification strategy, and it also offers the cross sell opportunity. Now let's come to the sector. The first big sector is the lending. I mean, this is almost like 170 lakh crore market where we have banks and NBFC as a big player. So Reliance, Geo is tapping this segment via the ecosystem route of retail and telecom customer, and the two or three big segment that they are targeting is the consumer durable, merchant financing, and also the MSME part. Second is the mutual fund where we have seen they have recently announced a tie-up with BlackRock, and today we have around 44 players in the market, and the AUM is around 40 lakh crore. So here they are looking at it very different in the sense that they are targeting the passive fund. I mean, today if you see the contribution of passive is almost around 8 to 10% in the market. And globally, it's a very big segment. So on the AMC side also, they are looking at a very differentiated kind of a model. Now on the life insurance side, we have 25, 26 player, and as you know, LIC is the biggest player there. Uh, Here again, the pure protection plan. I mean, that's where I have seen many private sector players struggling, and I'm sure Geo Financial will target the protection market, the pure protection market. And now coming to the general insurance, again we have some 2 dozen players there, but the state-owned players there are losing market share. If you see the market share of state-owned companies, I think it's reduced to around maybe 35 to 40%. So a major share is taken by the private sector player. And I'm sure Jio is are targeting there where they can gain big market share, from these state-owned players. So finally, it's the broking segment, and that's where we have seen a lot of disruption with Jiroda and Upstock. And it's a pure, digital play. And Jiroda has built a very good model, over this discount, Jiro's brokerage, and now they're lending and doing other advisory services. And so I'm sure Reliance is also looking at this model as a pure digital. Plus, they want to lend and do other thing more, over and above the broking.
Absolutely. So, Anand, one more question right there. The entire BFSI sector is grappling with stringent regulations that exist currently. So, for Geo Financial Counter as well, what could be the potential challenges as a prominent NBFC that it may face?
So one big challenge is the regulatory, arbitrage, which is now, the RBI has reduced the regulatory arbitrage, vis-a-vis the banks. So all NBFC now, follow, bank-like regulation when it comes to capital requirement, when it comes to liquidity, and even the NPA, recognition and all. And recently, you must have seen, the SDFC Limited merger with the bank, and one of the reason was the reduced arbitrage. So today, Geo has to compete with bank because they have to make all provisions and they have to keep that adequate level of capital which the bank keep. Now, second, the big change is the last year, RBI came out with the rule scale-based regulation where, they have a base, middle, upper layer, and the top layer. So they have, classified NBFCs in four, different buckets, and that happened, post this debacle of ILFS, Stray, Reliance Capital, and DHFL. So Geo will come in the upper layer where, there will be, higher monitoring and very close monitoring. Listing is one of the requirement, and Geo is already listed, but there will be, but Geo will be monitored very closely, because the kind of segment they are targeting. And if I see, the merchant, and the MSME loan, which are very, unsecured loan, so they have to build a book, more on the secured side also, since they are just starting. So we have to see how they, come out with the product basket.
Absolutely. So the plans that Mukesh Ambani has for Geo Financials are pretty big, but like you pointed out, challenges galore, and it may not be a cakewalk right here, but it will all be very well, watched out for by the entire investors community, the market participants, analysts, and even economists to find out what exactly could this financial behemoth really entail as we move along as well. So thanks a lot for that update, Anand. Let me now go across to my colleague Surbi, who's now written a very detailed and in-depth analysis as far as India's economy and where is it headed. So, Surbi, after growing about 7.8% in Q1, there are concerns that our economy may slow down. I want to understand from you, what are these key concerns? Why do we have such apprehensions about the Indian economy? Because we have been growing pretty strong, inflation has been coming off, a lot of things have been supporting us on the macros as well. But why are we concerned now?
Hi, Sakshi. Thank you for the question. We've been the fastest growing economy for the last 2 years, and this year again we're supposed to grow by 6.5% according to the government's estimates. But compared to last year, yes, growth is going to slow down, and despite growing at close to 8% in the first quarter, which is everyone's favorite number when it comes to GDP growth, there are concerns about growth because if you see globally, the situation has been a little tense and uneven in terms of growth because of the ongoing war and the global slowdown, which in turn has impacted our exports growth. And even if you see now, so goods export in August saw some improvement to a 3 month high, but it's not going to see the kind of levels we've seen in previous years. So there's always that worry. Secondly, even domestically, while we've seen strong consumption demand, private capex, although there are nascent signs of recovery, it's still not growing at the kind of level one would want. And with elections coming, there's also questions about how long the government capex can support growth plans.
Absolutely. But Surbi, also wanted to understand from you, while all of this is in place, despite that, like you also pointed out, that 2 years in a row, India has been the fastest growing major economy. And even for FY24, it is likely to retain that tag. So there must be some bright spots that, investors may be keeping an eye out on. So could you list out all of those?
Oh yes, obviously. So there are a couple of bright spots. If you look at, the private consumption that's still growing very strongly, and we are a big economy, so the size of the market is huge. If you look at recent employment data, also, so employment growth is happening, especially in the formal sector, and this is also one issue which the recent economic review of the Ministry of Finance has touched upon, that private consumption has been good. Inflation till now, barring food inflation, has been moderately low, and it's expected that it'll go down a little bit again this month, despite concerns over rising oil prices. So these are definitely some positives for the economy.
All right. So, Indian economy, despite the near-term challenges, may remain in fine fettle going forward as well. Of course, in FY24, it may retain the fastest-growing economy tag. But in case you're really interested in in-depth analysis, do read out this article as well. Let me now go across to my colleague Ashish Rukhaiyar, who's going to be talking about something very, very interesting that at least all our digital audiences will be very interested to find out, and that is the space that capital markets regulator is now keeping a keen vigil on as well. And that's the growing and the rising pace at which fin influencers have been surrounding us on all across social media platforms. So, Ashish, help us first understand. What is the kind of nexus between market participants and fin influencers that SEBI is now trying to target, and what are the steps taken by the regulator thus far?
Hi, thank you, Sakshi, for having me on the show. Now, we all are aware that there has been a sudden spurt in the number of financial influencers or finfluencers, as they are popularly known. And in the last couple of years, a lot of new investors, first-time investors, have come to the markets, and that has, led to a surge in demand for content related to investment or financial advisory kind of content. If you look at some of these platforms like YouTube, Instagram, Telegram, there's a huge following if you look at some of these top influencers of the country. Now the problem area is that along with these good financial advisors or financial influencers, there has been a sudden spot in the number of influencers who people think that they are self-proclaimed financial and investment experts, and they are more interested in giving clickbait content for their own vested interest rather than keeping the interest of the investors, giving the interest of the investors a priority. Now, a large section of market participants believe that what investors could think is genuine advice could just be a clickbait, content to download a broking app or to trade more with their existing trading app. And this conflict of interest is not good for the investors. Now, social media, if you look at these social media platforms, it's replete with complaints and allegations related to, that they have been misled by these influencers. Now, the crux of the issue is the nexus which a lot of these market participants have with these unregistered financial advisors. It could be in the form of getting more, investors to their broking platform. It could be, could be pushing a certain sector or a stock. So this is the kind of nexus which SEBI is trying to target, because a lot of these influencers, they make a huge amount of money based on these kind of collaborations or partnerships or engagements with the market participants. Now SEBI's intent is very clear. It wants to cut the funding or the revenue stream of these unregistered financial advisors. Now there's a very important point here. There are two kinds of influencers. One who are just giving you content related to increasing the financial literacy. Now that is something which is very safe. SEBI or the regulator doesn't have any issue with that. But the moment some influencer starts talking about stock, starts giving out, he or she starts giving out tips or recommendations, then that's something which SEBI is very clear that if you want to do something of that sort, you have to be a registered financial advisor. Now the biggest action from SEBI side came out in May when it barred a very well-known leading influencer called PR Sundar. He has more than 1 million followers on YouTube. Now, SEBI barred him, saying that he's giving out financial investment advisory without being registered with SEBI. And since November, SEBI has come out with more than a dozen such orders against unregistered financial advisory. Now, recently, SEBI also came out with a consultation paper in which it clearly said that no SEBI-regulated market intermediary can engage with any financial influencer or advisor who is unregistered with SEBI.
Sure.
So that's clearly what SEBI's intent is.
Absolutely. But these concerns, Ashish, they're not limited to just India, are they? Because there are global regulators which also seem to be mulling on ways to address the growing issues of related to fin influencers. And they've also taken some concrete steps as well. Could you elaborate a little bit on that?
You're right, Sakshi. SEBI is not the only regulator that's grappling with this issue. If SEBI chairperson Madhvi Puri Buch was very clear when she recently said that this whole issue of regulating financial influencers was a very hotly debated topic at IOSCO also. Now, recently, the SEC of the US charged 8 social media influencers in $100 million stock manipulation scheme, with 7 of those individuals being charged with securities fraud. It also filed criminal charges. In another instance, SEBI said that these fraudsters often use social media to scam investors. Then the FC, or the Financial Conduct Authority, that's the independent financial regulatory body of the UK, that has joined hands with the Advertising Standards Authority of that country to create a checklist to let influencers check if they are the right person to promote a particular product. Then we have the Australian Securities and Investment Commission that clearly states that influencers who want to give financial product advice must have an Australian financial services license, and the absence of such a license could even attract imprisonment up to 5 years for an individual. So it would be very safe to say that the issues related to financial influencers and monitoring and regulating them is indeed a global one, and India's SEBI is not the only regulator which is grappling with this matter right now.
Absolutely, and that is definitely an enlightening piece of news that what SEBI is also doing is in sync with what the global regulators are also doing when they're faced with such issues as well. And ultimately, the motive of SEBI is to protect the investors, which you rightly pointed out have grown in numbers over the last 2 or 3 years of the pandemic. And first time investors who do not have much knowledge are getting surrounded with such a piece of advice, and they may be falling into a trap as well if gone unregulated. But many thanks, Ashish, Surabhi, and Anand, for being with us on this edition and sharing all these insights about the key stories that make up this special edition. To all our viewers, please do go out on the stands and grab your copies. I've got mine, but this is a very, very insightful edition that you must have in case you're interested to know more about the economy, the stock markets, and of course, the biggest player in the stock markets again, Reliance Industries, and what it is going to do as it enters the world of financial financial segment as well. Many thanks for being with us on this special edition. Always a pleasure speaking to all of you, and do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets coming up right up on your screens.